We'd like to welcome everyone out there, presumably most of you being options fans. For those of you that are stock traders, welcome too. Just want to do a quick little recap of what I'm seeing in the market here today. It is Monday, December 7th, and right now you've got roughly a mixed market. It looks like we're overall up, except for the NASDAQ is slightly down, but overall we're not really moving. It looks like a lot of traders are either starting to take an early holiday or really still trying to digest those Friday jobs numbers and really what implications that has going forward. Clearly, the major decision or major moves that we saw based on those job numbers weren't in equities. Equities were still relatively whippy and flat by the close, but what we did see a huge move in was obviously gold. So let's take a look at gold and see what's going on there as far as what we see going forward. Now, first off, what was it on a daily chart? If you're a daily trader, Friday was a classic retest. Now, the retest was not the greatest retest because why? It was a retest within an acceleration band buy signal, as you can see on the chart here. That's what we have. Those aren't Bollinger Bands, those are acceleration bands. Now, what would be great is if that was a retest, but it did not violate the acceleration bands. That would be an incredibly powerful retest or low-risk entry point. So the bottom line here is that GLD key level is Friday's low. At this point, we're trading below that at 111.92, but 112.41 key level there to watch, folks. At this point, what does this mean? You're going to take a step back, and you're going to now be focused on what? The weekly charts. Because, you could get a weekly retest, and, what you want to look at that be more of a value play, but the bottom line is weekly is what? It's going to be a longer expected holding period. You could have up to 3 to 4 months. So if you're doing options on that, obviously you want to go much further out. Probably a 6-month in the money is something that we would recommend. Higher cost to you, but also a much smarter play when you're playing on the weekly chart. Let's take a look at oil too. Oil is weak. It's very weak. It's been very weak as of late. This is on the weekly chart. Let's go back to the daily. You can see that it's just been in a downtrend. Yet the gold was in an uptrend. Typically they are trading roughly in the same direction. You can see that they're clearly not here. DMI difference here at the bottom, which measures the difference between DMI and DMI positive, DMI negative, is well below the zero line, that key zero line, which means what? DMI negative is above DMI positive. So the prevailing trend here is clearly bearish. And that to me is interesting. And obviously over time, gold and oil will somewhat revert back to a percentage performance mean, if you will. It's not guaranteed, but that's over history, that's what you'll typically see. So right now there's a big divergence there, and we'll see how that really corrects itself. But what's interesting is within oil, you've got a couple different ETFs. I'd like to take a look at, like XOP, which is the Spider's Oil and Gas Exploration ETF. You can see that it's up a little bit, but still also very, very bearish. But interesting to see that neither one is in a acceleration band sell signal, which means it's not an extreme trend. What are all these things moving on? Well, including equities, especially over the last several months, all these have been moving heavily dependent on one thing: the U.S. dollar. We'll take a look at the U.S. dollar index as the ETF, which is the UUP. It's the dollar bullish, so this is just basically tracking the value of a dollar. Take a look at that over time. We're back here down to, and it looks like we fell below resistance a little bit, which was way back on July of the 15th. So what are we seeing here most recently? What's today, and what's more importantly, what was Friday? Well, I mean, I think it's more important for you to not get mixed up in the short-term trends. Take a step back here. What did Friday mean for anything? Did it break us out of any sort of longer-term trend? It didn't. That's unfortunate for the U.S. economy long-term, in my perspective. But you can see here, bottom line is that we haven't broken. It looks like we've got support roughly at $22 here on the UUP. And we're right now at $22.46. There could be a little bit of that playing in. Bottom line here, though, is that we're still in a bear trend on the U.S. dollar. You can see a little bit more up in the short term, but overall, you'd have to see. I'd like to see I'd like to see a little bit more, especially